You think about low rates, you think about a change in what fiscal deficits, maybe the market comes back today. I don't know. Not that horrible of a day.
No, and not so. But what we are seeing right now are some of those flight to safety trades, right? This idea that with this tariff uncertainty and global economic uncertainty and everything else, gold might be the place.
What a segue!
Exactly. What
that was a great segue.
I like that. It's like we do this for a living, right? Anyway, gold is hitting another record high amid all of the continued uncertainty. But one of these traders out there believes that now is the time to get ahead of a companion silver trade for all the same reasons that gold is surging to records. Joining us now to show us how to do it is Mike Coe, the chief strategist with OpenInterest.pro. No surprise. I think earlier I saw today gold prices for futures front month contract 3102 and change, 3102.20. Somebody's already reading them for gold prices right now. It's basically what it comes down to. Or silver, hi-ho silver.
Burl Ives, the Burl Ives trade.
Right. So, Mike, let's talk about silver and why you think that it's a better trade relative to what we're already seeing for the record highs in gold.
Yeah, I mean, one of the things, obviously, we have record highs in gold. You know, we are not seeing record highs yet in silver, but it certainly has been doing exceptionally well this week. And, you know, we had some recent local highs up, you know, a couple of bucks from where we are right now. And, of course, the all-time highs are substantially higher. And my thinking is that silver could do a little bit of a catch-up here and break above the highs of the last 12 months. And so, you know, my thinking is to try to take advantage of something that we call call skew, and that is the tendency in some commodities for out-of-the-money call options to trade at a higher implied volatility than the at-the-money ones do. And what that permits is the ability to make a bet to the upside that gives you probably better risk-reward than doing something similar in equities would provide. So, for example, I was looking out about 1 month to the April 25th weekly expiration, so that's 4 weeks from this coming Friday, and looking at the 31.33 call spread. So that $2 wide call spread would cost about 50 cents. So that gives the buyer of that call spread a payoff of 3-to-1 if it should reach that higher $33 strike price, which would be up 10%. Now, that would be a big move for the metal, but, you know, this is a trade that would appreciate even on a smaller incremental move in the intervening period.
So the pricing dynamic is what's interesting here, right? Because what you're saying is that that $33 call, right? That one there has relatively more value than you would expect it would. So you're going to buy the you're going to buy the $31 call, which gives you the upside exposure to anything above 31, and then in essence sell away anything above $33 to cheapen the value of this entire spread. So you're playing for that $2 range minus the 50 cents you're saying it costs. Why do you think, why not just be that much more bullish and just buy the call outright? Or do you think it is because of this pricing dynamic right now?
Well, one, it's the pricing dynamic. So if you were looking at a similar distance call spread on, say, the S&P, you would expect to pay probably something like 40% of the distance between the strikes. So something like 80 cents instead of the 50 that is costing you here. The other thing I would quickly point out is that the increase in price that we've seen in silver recently has been pretty orderly. And so what that means is that the realized volatility hasn't been that high. It's about 15%, and these options are priced at about 20. So because of that premium, that's the reason that I'm looking for that offset. If the at-the-money 31 strike call was a little bit cheaper, I probably would be inclined to just buy it outright. And if we start to see the volatility of silver creep up, which it could if we start to really get a rally going here, then just buying upside calls is probably the right play.
All right, Mike Coe on the trade on silver as opposed to gold. Thank you very much. We'll see you soon, Mike.